Hello and welcome to this week's MoneyFit Live webinar. My name is Todd Christensen, Education Manager at MoneyFit. Today's topic is 6 steps to rebuilding your credit. We are monitoring our chat today. If you do have questions or comments, please feel free to use that and we will be happy to reply to that. This webinar will also be archived along with other previous webinars at moneyfit.org/live. So please check out some of the previous webinars we've done. Let's go ahead and get into this topic. This is one that is one of my most popular topics whenever I go into the community and do presentations. They want to know about credit building. There is a lot of misinformation out there, a lot of disinformation in some cases. What is it that you need to do to build your credit? And if you hear somebody say, well, you can get your credit fixed now, that's a huge sign that they're after your money and only after your money. If there is any kind of benefit that sort of an organization can offer you, it will likely be very temporary, and it will cost you probably well over $1,000, maybe even a couple $1,000. So here's the time frame you should be looking at: 6 to 12 months. That's about how long it will typically take to see some positive benefits coming from real credit building strategies. Here are some default rules. We're going to go through 6 steps, but just the default rules, things that you should be doing no matter what. These are the things that are the most important factors in your credit. And so if you see here, there's first, you got the make your payments on time every time. Make on-time payments. It should be a given. Even if it's just the minimum payment, at least make the minimum payment on time. Next, you got the zero balances. On as many accounts as you can, keep the balances at zero. Do not believe anybody who says you have to carry a balance. Carry a 30% balance. Carry no more than 30% balance. Carry a 50% balance. That is inappropriate information. The further away from your credit limit, the better. And zero is best. You can have a zero balance every month. You make one small purchase, pay it off. You can have a zero balance as long as there's a little activity on it. You are building excellent credit. The next one, keep old accounts open. Do not close old accounts, because in doing so, you're going to hurt a portion of your credit that is basically the second largest factor. Keep your old accounts open. If you don't use them, they will likely close on their own after 4, 5, 6 years, depending on each creditor's policy. What you can do is about every 2 or 3, 4 years, make one small purchase that you're going to make anyway, use that account, and then pay it all off just to keep it open. You don't have to be using it regularly. But the only time I recommend closing accounts is if you've got annual fees that you're dealing with. I'm not a fan of annual fees in virtually any case. And 2, if it's for a card that you just can't say no to, store card that draws you back into overspending. Otherwise, keep old accounts open and just let them be there as a benefit to your credit. And then the last one, try to limit any new applications for lines of credit or credit cards, store cards, loans to 2 to 3 a year. In some cases, you can go a little more, but generally try and limit it to no more than 2 or 3 a year, because that can have a small, albeit small, but still a negative impact on your credit rating. All right, so let's go ahead and get right into step number 1 for rebuilding your credit. This, by the way, is also appropriate for anybody who's building from scratch. This is also a great strategy. But number 1, pull your credit report and dispute any errors that you see on there. Where do you pull your credit report? You go to annualcreditreport.com. That is the only website where you should go. There's the website address, annualcreditreport.com. Any of the other places, they will generally only give you a free credit education score, or they will try and charge you a fee or sign you up for some sort of credit monitoring service for their free credit report. A credit report does not come with a score. That is something that you really shouldn't really worry about right now. You can always get the free ones through a lot of the apps and banks and credit card companies that offer a free credit score and give you an idea what they are. But you can also order it by phone, 877-322-8228. You'll have to give your name and address and social security number, some other information. But you can order it online, get it immediately, or you can order it by phone, and you can also download a request if you wanted to do it by mail. You can download that form. Next one, let's move on to the next step. Become an authorized user on somebody's account, usually a family member who's got good credit. Ask them if they would be willing to put you on their credit card account or accounts as an authorized user, not a co-owner or a joint owner, authorized user. You don't have to use the card when it is delivered. It doesn't even have to go to you. It can go, your family member can request the card, and it's always, generally always free. The card can go directly to them. They can shred it, and you automatically start benefiting from a little of their good credit. If their credit goes south, generally it does not impact your credit negatively. But even if something negative did show up on your credit report, it's really easy to dispute and remove, because as an authorized user, you're not responsible for any of that activity, for the payments, but you can rebuild your credit or start building your credit this way. It's a great way to do it. I did it with two of our older kids. When they were even 16, they didn't even know about it until we told them later at age 20 when they asked, hey, what is this account that's on my credit report? Well, that's an authorized user account. You never used it, you never saw it, you're never going to use it, you're never going to see it. It's just something that we were doing to help them start building some of their credit. Next, you've got the opportunity to use utility bills and maybe a cell phone plan, not a prepaid cell phone account, but a cell phone plan to build your credit. You can work with your utility company, ask them, they may or may not check or report your history of payments to the credit bureaus. They will, if it goes to collections, it will end up on your credit report. But otherwise, check with them, see if they would report your history of on-time payments to the credit bureaus. But certainly you can use the Experian Boost product. This is something that was launched in early 2019. Experian offers this service. You sign up for it. It's free. There's no negative impact for just signing up. You give them access to your checking account. That freaks some people out. It's a read-only access. So what that means is they can't go in and transfer or do anything like that. They're just going to see where your bills are going, and you're going to identify for them, this bill is my rent, this bill is my electric bill, this is my cell phone bill, and you're going to identify your regular monthly bills, and going forward, they're going to count payments to those bills as they would a credit card payment. And so you can get credit for paying your bills through Experian. The other two currently, TransUnion and Equifax, do not have such a program. We're hopeful, and we'll of course let you know if this happens in the future. Number 4, start small, start local. If you are new to credit, or you have credit rating that is not so good, you're going to find it hard to qualify for any kind of line of credit or credit card or store card. The easiest place, or the least difficult, would be at a local store or a regional chain or a tire shop especially. A lot of tire shops do their own in-house financing, and you can, if you're saving up money to get some tires anyway, you've got enough cash to pay for them, you go into the store, into the shop, you apply for that line of credit. They're gonna, if they approve you, it'll probably be at 25, 35, 30% interest. They're pretty high interest rates. So you get that line of credit, and instead of waiting for the bill to arrive 30 days later, 45 days later, 25 days later, you go home, you sign up, you connect your payment account, your bill paying account, checking account, to this new account, because you're going to have the account number, and you pay all of it off, but let's say $50 or so. So you're not paying interest on the full amount that you paid for the tires. You're only paying that 20-30% interest on a small $50, and every month you make a monthly payment, and so that you can build 6 months worth of payment activities. That's really what the credit bureaus need to be able to generate that credit score for you. So pay all of it off except just a little bit, and then you're building your credit that way. Now, if you go into a retail store, let's say a clothing store, I recommend don't even leave the store before you go to the customer service desk and pay the entire amount you just purchased. In some cases, I know, for example, JCPenney, you can make a purchase on their store card and sometimes receive a discount that way, and then you can just you don't even have to turn around. You just have to tell the same clerk, say, I would like to now pay off that account, and you give them the cash, write them a check, pay them with a debit card, whatever they accept. Other stores, go to the customer service desk before you leave so that you do not leave the store with a balance on that account. Very critical. Build your credit with the purchase, but then pay it off before you leave. Don't ever go home with a balance on that account, otherwise you will forget about it, and then when the bill does, or the statement does arrive, you'll think, oh, I've already spent that money on something else. Now I'm going to have to make only minimum payments and pay all this extra interest. So that's step 4. Here you go, step 5, find a no-fee secured credit card and use it sparingly. This is if you have to. Really, if you start with these others, first 1 through 4, and they're working for you, you may not even need to get to step 5. Step 5 is where we start to see common fees. Most secured cards will have some sort of an annual fee. Some of them actually have a monthly fee, and I've heard some in the past that actually had a per transaction fee. So they will fee you to the poorhouse if you let them. Search around. If you do need to go with a secured card, look around to the banks and credit unions in your area and ask, do you have a secured credit card? What are the annual fees? And some actually have no annual fees. Here's how secured credit card works. You front the $300 or the $500 or the $800 usually. That is the credit limit for that credit card. It's going to be a Visa or a MasterCard typically. So let's say you deposit $500 into that bank or the credit union. They issue you a $500 credit limit credit card. Then you can use that credit card just as you would any other credit card. You make a purchase, you get a bill, you pay it off. Pay it off in full. That's always key. Pay it off in full. If you miss the payment, they then take the payment from that secured savings account where you put the $500, and then they add a few fees for late payment fees. And then they cut off usage of that credit card until you get the balance back up to the $500 in this example. Missing a payment on a secured credit card is going against everything, the entire purpose of having that secured card. If you're going to get a secured card, use it only once a month for something that you are not going to overspend on. So I recommend using it for something such as a cell phone bill. Don't carry it around in your purse or your wallet. Don't carry it with you into stores. You will use it for items that you did not expect to spend if you carry it with you. Leave it at home. Put only one purchase a month on it. Say that cell phone bill or like a Hulu or a Netflix that you can then pay off in full at the end of the month. After 6 months or 12 months of on-time payments like that, go back to the bank or the credit union and say, hey, is it time? Can I convert my secured card to a standard credit card so that you can get your savings back? Quite often it's a minimum of 12 months, but you can check and see what their policy is. After step number 5, you've got the last one, step 6. Some banks and credit unions will offer what are called credit builder loans. These, whereas with the secured card, you have to come up with the money up front. The credit builder loan, they actually lend you that money. Sounds great, right? You get a loan and they're giving you money and it's building your credit, except that they take that money and they say, here's your $500 or $1,000. Whoa, no, let's put it into a credit builder savings account. It's a secured account. You cannot open it. You cannot access that money until you have completed all the arrangements in the agreement, which generally are repay the loan as agreed. They'll set it up typically, let's say it's a $1,000 credit builder loan. They'll set it up, you make $100 payments a month for 12 months, and at the end of 12 months, you get that $1,000 that they lent you. They give you the loan, they just don't give it to you until you have essentially put money into it. It's kind of a forced savings if you think about it. In some cases, the interest rates might be in the single digits, 6-7%. In some other cases, it might be 10-15%. Lower is always better. They do typically pay you interest on that savings where they lend you the money and then they pay you a little, but it's going to be a fraction, a tiny fraction of what you're having to pay. And most of them do also allow you to pay that loan off ahead of time without any kind of payment. So if you are in that situation where you come across money, you can pay the loan off early, make that 6 months of on-time payments before you pay it off so that you can get credit for really be able to generate that credit score that you're looking to build. So those are the 6 steps. Pretty basic, pretty straightforward, nothing too crazy out there. If you're looking for something more exotic, I highly recommend you avoid looking elsewhere, because you're going to find somebody who's going to tell you something crazy. It sounds really, I know the secrets of how credit scores work, and I can play the system and find the loopholes. The loopholes, basically what they're looking for are the loopholes in your wallet, and they're after your money. So these are the things that generally are free. The first few steps are all free, and they just get a little more fees as you go down. Preferably, if you can do the first few steps and build your credit that way, you can still have excellent credit. Okay, so let's just talk about, again, these third-party options. If somebody offers you, tells you, well, you should consider getting a credit card balance transfer. Credit card balance transfer sounds wonderful, especially if it comes with a 0% interest period, grace period, or period for 6 months or 12 months or more. But let me tell you what happens to the majority of people who do this. They take all their debts from these debts over here, and they pay them all off with the debt over here. So they basically transfer the debt. It's not a debt elimination option. It is a debt transfer. And now I think, well, look, I paid this all off. Yay, that's going to help my credit, right? Well, one, it's really not, because, yeah, you paid it off, but now you have a brand new credit debt. And so they cancel each other out. The problem is, two, this is the biggest problem, about 70% of people who do this not only are dealing with this new debt, which is the same amount as their old debt, but these old credit cards and things they paid off, you know what happens to them after they've paid them off? They start using them again. And pretty soon, within about a year, year and a half or so, those cards are usually maxed out again where they were before they did the balance transfer. So avoid credit card balance transfers. They don't help your credit. They actually will hurt your debt situation in the long run for the most part, and that will also hurt your credit. Credit repair companies are the ones that will tell you, hey, we are attorneys, or we've been working with these companies for 10 years, and so here, buy my book, and then I will sell you, you can use my service for $500 or $1,000 or $1,500 or $2,000. I know how to work with these places, and we'll get all these things moved, get off your credit. In the situation where they actually can get that some of those things removed, you have to understand that much of that information, if it's accurate, will end up coming back on your credit report. A lot of that can be temporary. So avoid doing anything that they can do, you can do on your own for free. And yes, it can feel overwhelming, some of these things, but as I mentioned, pull your credit report, it's free. Follow the simple instructions. The consumer reporting agencies, Equifax, Experian, TransUnion, have made it really simple to dispute any errors that you find, and it's free. Don't do all you can to avoid paying somebody to do this for you. And if you have questions, give us a call, 800-432-0310. We can step you through the process, get you to the resource. If it's not something that we can do, we can get you a resource that can help you. It doesn't matter if they call themselves a law office, by the way. Most of the credit repair agencies that call themselves by the name of a law office, they're basically just based at a law office. The attorney is just lending them his or her title to try and make it sound like they're more able to do more for you than you can do on your own. You know, if you get to the point where you need an attorney, then use an attorney. It'll cost you $100, $200 for them to draft a letter. But for the most part, you don't generally need credit repair organizations, attorneys or not, to do for yourself what you can do for you what you can do for yourself. All right, so follow up. Let's talk about last things. Just keep learning. As with all of our webinars, we recommend always continue to find new ways or better ways to manage your finances. That includes your credit and your debt and your budget and your spending. Keep learning, always learning, and if you need to, contact a credit professional. And we are happy as a nonprofit to always be available for you to talk over ideas, to give you some tips on what you can do to minimize the stress in your personal finances. So let's talk about, as I do in every weekly webinar, what is the theory of change? How do you change? Because if you just watch this and that's all you do, you're not going to change. Nothing will happen differently. Picture your future. What does your future look like? Talk about your credit. Where's your credit now? That's the second question. Consider where you're at now. Are you happy with where you're at? Or is your credit score pretty low? And then compare those two. Here's where your future, here's your current, and compare those two and ask yourself, am I content? Do I like where I'm at? And generally we don't. We're heading in the wrong direction, or we're not heading in any direction at all. It's that difference that creates the motivation to change. So you ask yourself, am I happy with where I'm at? No. Where do I want to go? And that's where that inner drive is going to start coming from. Tell yourself, okay, I commit. I am going to change. Now I am frustrated with where I'm at or with the direction I'm headed. I'm going to change. You tell yourself regularly. This self-affirmation, if you keep it in front of mind, you are more likely to change. But here's the key. The absolute most important thing. Do one thing right now, today, within the next 5 minutes, within the next 1 hour, if it goes 24 hours and you haven't done any of these things, you will never do them. You won't. That is human nature. So here's take one of these steps. Pull your credit report. That's an easy one, annualcreditreport.com. Pull it right now. Step number 1. If you've already done that recently and you're still trying to look for another step, 2, think of a family member that might be able to put you on as an authorized user. Call them and talk to them about what the impact is to you and how there's absolutely no impact to them as for being an authorized user on their account. 3, if you've done all those or don't want to do either of those, sign up for that Experian Boost product. Free. It takes about 5 to 10 minutes, really. Not everybody's going to be able to sign up for it. I know I tried, and my local credit union, they don't have access to do it. But if you have a big bank or a regional bank or a credit union, one of the larger credit unions, certainly you're most likely to be able to sign up for it. Just pick one thing that you can do and do it right now. And I'm actually going to finish this off now. I'm going to say, all right, there is no more for this presentation unless you want the certificate of completion. You can go to bit.ly/MFL, that's MoneyFit Live -6, if you want a credit certificate of completion, and you enter in your name, your email address, and then that's the passcode right there. Rebuild 919, no spaces, no capitals, no dashes, nothing. REBUILD 919, and then your certificate will be on its way automatically via the email in PDF format. And that's it. Remember to find that one thing that you want, and do it right now. And then join me again next week. Check out some of our archives, moneyfit.org/live, and we'll look forward to hearing from you. Hope you have yourself a great day.